Now, to come back to your point about stimulating investments and this infrastructure investment that you just spoke about, Kaushik Basu last week was telling us that India needs to get back to that 38-39% kind of investment ratio which we had back in 2003 and even in 2010-11. What is your recipe for getting back to that kind of investment rate? How much would you have the central government do? And do you think these recent initiatives like the production-linked initiatives, etc., can actually draw in the private sector and get the investment level high up again?
Well, on this one, let me say that what has fallen is private investment. And that too, not corporate private investment, but non-corporate private investment. That means small-scale investment, housing, etc., and so on. Whether we go back to 38%, we're now probably somewhere around 30%. Maybe a little lower. We certainly need to get back to somewhere around 34%, if not 38%. And most of that expansion really has to be in the private sector. It's the revival of the private sector. I don't believe that by concentrating on the public sector, you're going to revive the economy. But where the public sector can actually deliver infrastructure, which the rest of the economy needs, this is a good opportunity to put in a little more in there than you would later on. So as far as what to do, that's pretty clear. Now, what else is needed? I think we should recognize that looking ahead, you mentioned the production-linked incentives. I think that what we need is a clear recognition that we have to have a much better export performance. I don't actually mind a few selective production-linked incentives in critical areas, but we have 13 sectors that we've listed for production-linked incentives. I would have said that in what you might call the green energy area, or developing green hydrogen, or developing battery technology, things that in the transition to a low-carbon economy the country needs, and there's a lot of technology to be brought in. Some selective support there might be a good idea. But otherwise, I think the real reason why we are not competitive in global trade, and that is preventing exports from doing as well as they could. I mean, we must remember that we are doing worse on exports than Vietnam, we're doing worse on exports than Bangladesh. And both of them are facing the same global situation. So why is that? I personally think that the decisions that we took in the last 2 or 3 years of raising import duties were, I think the finance minister received bad advice. It may seem like a sensible thing to do to protect domestic industry, but the fact is that what the raising of import duties has done is to raise the cost structure of Indian industry. I mean, this is what the 1991 reforms made a turnaround. And several successive governments, including the government of Prime Minister Atal Bihari Vajpayee, continued the trend of reducing duties. And the principle that was followed, and I mean, Yashwant Sinha, as the finance minister, actually restated that principle, that we want to get our duties down to the same level as they are in East Asia. Now, we've reversed that. I think the government was poorly advised by whoever gave this technical advice. And I would be very happy if the finance minister were to say that, look, as far as customs duties are concerned, we have a medium-term objective of bringing the rates down to the same level as exists in Southeast Asia. And to that, with that end in mind, this is what we're going to do in the current year. I mean, she doesn't have to do it all in 1 year, but the signal should be clear. The danger at present is that the signal is that if some domestic industry promises that if only you raise the import duties, then I will do well, the chances are that the government will succumb to that promise. Now, there are many distinguished economists who advise the present government who have actually said the contrary. I mean, the first chairman of Niti Aayog is Arvind Panagriya, a very distinguished trade economist in Colombia. And he has categorically said that we should reverse this raising of customs duties. And more recently, the former chief economic advisor, Arvind Subramaniam, has said the same thing. So I personally think that in any outlining of tax policy, we should junk the notion that raising customs duties is a good idea, and we should put back on the agenda, how do we get back to bringing our customs duties down? Let's be clear, we are trying to join the global economy. Many people, Prime Minister himself has said that he's in favor of global value chains. We should integrate with global value chains. You know, we cannot integrate with global value chains if we don't bring our duties down to the same level as other countries in East Asia who are actually competing with us for joining these global value chains. And personally, I feel that, you know, even the decision that was very unfortunate that the Commerce Ministry decided not to sign the RCEP agreement in 2019, although, I mean, it was the present Prime Minister who had put out the signal that we must act east, and that's a good slogan. But, you know, acting east, the logical consequence of acting east would have been to join the RCEP agreement. And it would have signaled to the rest of the world that, look, if you want to locate production facilities in India, in order to service other countries, then India's customs duties are going to move in line with what's happening elsewhere. See, at the moment, we may be able to attract people to produce things in India behind high customs tariffs. But this production is not going to be the basis for successful exports. And obviously, we are a moderately large market for some simple things. So it's always possible to attract people to set up a production facility here. But that production facility will essentially be an assembly of imported components. And I don't think that's really the long term what we want to do. We want to develop a deeper production capability, which will link up with global value chains, and we export to fit in with other people's products in order to service the global market. That's really what we need if we want to revive exports.